On 18th February, Rwanda's central bank announced the monetary policy and financial stability statement projecting an economic growth of up to 6.3%. Now, given that number, we were quite curious about sector-by-sector development. Our reporter Arnold Segawa engaged the governor of the central bank, John Rwangomga, for an in-depth look into these numbers. And almost a decade and 7 listings later, we catch up with Dr. Michael Piwawa, the Commissioner of the U.S. Securities and Exchange Commission, on the relationship between economic development and active market trading. We'll have that and more coming up in today's show. My name is George Ndirango. Welcome to Doing Business in Rwanda. The Rwandan economy performed well in the first 3 quarters of 2015 as real GDP grew by 6.9%. The 2015 real GDP was on average driven by the good performance of the service sector, followed by the industry sector, which grew by 7.3% and 7.0% respectively.
Implementing the accommodative monetary policy, we allow more liquidity within the banking industry, and that had helped to develop or to grow the interbank market. That is a key to growing the financial market in general. So you see volumes of value of interbank market increasing 2014, almost doubling and maintaining that level in 2015. The other key point is the sale of treasury bonds to the market, government treasury bonds. As we have said before, we agreed with the Minister of Finance to be issuing a bond every quarter, apart from mobilizing financing for the government, but this is mainly focused on developing the capital market. We used to raise this money through short-term instruments of T-bills, but now we've transformed a big chunk of that into T-bonds. So as you can see, last year, in 2015, we were able to successfully issue 4 bonds with different maturities, 3 years, 5 years, and 10 years. So next week we'll be issuing another bond, 15 billion of 5 years. I hope most of you here have heard of the news and are ready to invest in the bond. Then in May, we are planning to issue a 15-year bond, which will be the longest maturity. So we want to build that yield curve within our markets.
With the global economic turbulence, emerging markets and much of sub-Saharan Africa had to revise their projections. 2015 was marred with currency headwinds and falling commodity prices.
We have 2 main drivers of our economy. We see agriculture projected to grow at 5.1% this year, and services remain a key factor in our economic growth. So services here, we're talking mainly about trade and financial services. Then, of course, on the industrial construction also still remains a key driver of our growth. So it's mainly these are the main drivers we see.
Deloitte just released a report, and it does show that investment coming into construction, at least for East Africa when it comes to Sub-Saharan Africa, is very, very bullish. Tell me, how is this relating and how is it coming into the Rwandan economy?
Yeah, I think as you said, we see big investments in construction industry, and for example, just last year, 2015, this grew by 15%, and it was a big drive of our projected performance of 7%. As you see around cranes coming up here, and not only in Kigali, but also even up country. So it remains a key sector driving our growth. And when you look at demand, I don't have the exact numbers here, but when you hear of demand for housing in, for example, in Kigali city only, before you even go in the other secondary cities, it's being met to about 30% or even less. So the room to continue investing in this area is really still big.
A very interesting feature that I want to touch that has been very, very crucial for 2015 is the appreciation of the dollar. We saw the Ghanaian cedi depreciate by 2.7%, the Ugandan shilling depreciate by 1%. It does go on to Kenya, 1.4%. I mean, the government is still mopping up with repurchase orders. How is Rwanda guarding itself?
You mean for this first part of this
At
year?
At least for the first quarter.
Of this year?
Yes, please.
Ah, yeah. Right, it's hitting us all. I think we are now at 1.6%. Yes, so it is a challenge worldwide. As we said, the US dollar started hardening last year because of the good performance and therefore capital flowing to the US. And so that created waves across different economies. And so we are not spared from that. But we were able to weather through that last year. Last year, where others had double-digit depreciation, we had 7.6. And we think, though we've had a bit of expedited depreciation the first 2 months, but it's mainly delay in inflows of private foreign exchange. So we expect that to pick up before the end of this month. So overall, we think still by the end of the year we won't be in double digits at all. So we still maintain it around where we were last year.
And my final question, you did hint something about a platform that all the central banks across East Africa have come together to sort of cushion themselves against the macroeconomic activity outside the region and sub-Saharan Africa as a whole. Where's this going? Are we going to be seeing more dialogue, or is it a first step towards a monetary union?
We've signed a memorandum of understanding between ourselves, the central banks of the region, to foster or to expedite what we call currency convertibility. So our currency should easily be converted from one currency to another, and it shouldn't be just based on speculations of traders across the region. And we as central banks have agreed to be like a clearing houses. So a Kenya can come with Kenyan shillings from Kenya, buy goods here in Rwanda, deposit the Kenyan shilling with the trader takes it to the central bank, to their bank, and then the bank will bring it to central bank, so we do the exchange. So when it accumulates here, it's our responsibility as central bank to export it back to the central bank of Kenya, vice versa. So there's a lot going on in terms of the operational network of how we'll do it, but the ground is there, the framework is there. What remains is to fine-tune the nitty-gritties, and therefore, when the currency convertibility is achieved, the East African payment system will be more used than we see it today.
Opening up a country's financial markets exposes it to inflows of information, expertise sharing, and opportunities for trade for the country. But how much of this contributes directly to economic growth? Here's Arnold Segawa with Dr. Michael Piwawar for a broader look into the U.S. Securities and Exchange Commission.
The SEC has a three-part mission, which is to protect investors, maintain fair, orderly, and efficient markets, and promote capital formation. Oftentimes, the two parts of the mission that get the most news are the investor protection issues. Those are most relevant in terms of when we do enforcement actions against basically bad guys who are trying to rip off investors. Maintaining fair, orderly, and efficient markets has to do with the way we regulate the well-functioning capital markets in terms of our stock markets and our bond markets. But the one piece of our mission that doesn't get as much press is the capital formation piece. And one of the reasons why I'm here in Rwanda is to meet with our counterparts at the CMA, because they're doing great things in terms of promoting capital formation and promoting capital markets-based financing here in Rwanda.
How does the U.S. SEC track mutual fund activity in countries that are not maybe allies of the U.S.?
We have a number of regulations for investment companies, or mutual funds as you call them, in terms of what securities they're allowed to invest in, the concentration in those securities, and we have a compliance team that does on-site inspections of them periodically. We also take tips from investors if they think that there's any problems with them as well too.
By 1989, we're looking at only 5 BAUSes all across sub-Saharan Africa. As we speak right now, there's over 19. Tell me, what is the correlation between economic growth and a vibrant BAUS?
the link is clear. What the evidence shows throughout history is that for economies to grow, to raise your standard of living for individuals in the country, you need to have the proper balance between bank-based financing and capital markets-based financing. Banks have their role in lending to particular individuals or institutions, but you see that capital markets have to complement that, because the risk-based capital, the capital in terms of financing the entrepreneurs who are going to make the next new products and services that are going to improve the standard of living of everyone in the country, has to come from the capital markets. The capital markets are the ones that traditionally fund the more riskier projects where failure is an option. They fund the more long-term projects in terms of like infrastructure and those types of things.
And finally, what can we do to see more companies have IPOs on our stock exchanges here in Sub-Saharan Africa?
Just keep doing what you're doing. I've had meetings this morning with the CMA, with the Rwanda Stock Exchange, with the East African Exchange Oil on the commodity side, other government officials. The commitment to promoting capital markets here, the commitment to integration within the region is very strong and is very important as well too. And so just keep doing what you're doing. You're on the right trajectory, and don't screw it up.
Indeed, more listings equals more opportunities, and we here at CNBC Africa will keep you up to date on the financial markets as they develop in this part of the region. That's all from this week's episode. To give us feedback or insight, email us at dbir@abn360.com or tweet us at dbirwanda, or my personal handle at Georgie Ndirango. On behalf of the entire Doing Business in Rwanda team, thank you for watching. Keep it CNBC Africa, first in business worldwide.